Well, I guess you could say it's official. Uptober is not Uptober. October was not a bear market killer. It was a downtober, so we've suffered 3 straight months of the market going down. Ray Dalio says that there is a 50% chance of a World War III, which is definitely something that has not been calculated into the markets right now. I don't believe that we have seen the potential risk associated with this war. Guys, the market has been sounding the alarm, and every single recession indicator has been flashing red. The Magnificent Seven over the last couple months have had a magnificent decline, and we're going into what I'm going to consider or call a make it or break it week. We are either going to bounce or the selling is going to significantly increase. I have done a fair amount of research this weekend, and I'm going to start this show off with sharing something that one of the guys that I like to follow, I've talked about him on this show before. He's got 40 years experience in these markets, and he makes millions of dollars trading. And here was his thoughts going into this week. I'm talking about Mark Minervini. He said, I want to make it clear that I think that we are in a correction with a new bull market that started off of the lows in October of 2022. So right off the bat, he's saying, yes, we're in a bull market and this is a correction to that bull market. But my opinions do not drive my trading. Sound principles and managing risk in real time does. So he's basically saying, I'm still going to work my trade plan, even though I do think that we're in an overall bull market. This is a correction. He said, I'm still going to work my trade plan. I'm not going to be even attempting to guess whether we're going up or down right now. He said, the current tape is bearish and I have no idea how much the market will correct or if it will bottom tomorrow. Fortunately, I do not need a crystal ball and I don't need to pick bottoms to be a highly profitable trader. With a few stocks meeting my criteria and a market that is clearly under distribution, we've talked about this before, that stocks go through 4 cycles. They go through an accumulation phase, they go through a markup phase, they then go through a distribution phase followed by a decline phase. Every stock and crypto is subject to it. And for the last couple of months, after Apple hit $200, I said to you guys, we are entering into a distribution phase on all of our favorite stocks. And so I'm going to remind you, what is distribution? What are the characteristics? What marks this cycle pattern? Well, the price action for accumulation is tight. It means that the range of the price movement is very, very tight. That's the characteristic of accumulation. Markup, the characteristic is a real strong move primarily to the upside with very small pullbacks along the way. Distribution is a very wide price pattern. Okay, it means that we're going to swing low, turn right around and swing high, turn right around and swing low again. So that's the phase that we're in, and that's the phase that Mark thinks we're in. So let me keep going. Remember, he said with few stocks meeting his criteria, he goes on to say that I have been forced into cash months ago and will hibernate until conditions improve. All right, guys, that's one of the main points I wanted to leave with you guys today. If your account is absolutely suffering right now, let's just pause and consider ways that we could remedy it or lessons that could be learned from it. One, I'm going to give you guys the 2 number 1 reasons why one of my trades fails. This is number 1 and number 2 reason that is always the case when I find myself in a failing trade. These are the 2 things that got me there, and I think they're lessons that you guys could take away from today, and I bet you'll find that these might be your 2 reasons as well. The number 1 reason, and you guys have heard it hundreds of times, is the trend. I went against the trend. Okay, so we know that right now we're in a bearish trend going down. And so we know that every single day last week, if we had acknowledged the overall trend, our primary positions would have been to have shorted the market. Now, what happens when you try to go against the trend is you guess the bottom, right? But you're not really honoring the trend. And you can only be right one time when you go against the trend and you attempt to guess the bottom. You can only be right one time. But if you go against the trend and the trend continues, you can be wrong over and over and over and over again, right? Number 2 thing that has worked against me when I've had a losing trade that has become a problem is position size. Now, Mark Minervini just told us that months ago, he saw that we had entered into distribution. He saw that the markets were getting choppy. He saw that the conditions for continuing to move higher or bullish momentum to the upside were gone. And he said, I was forced into cash because I didn't see any good stocks to trade. Now, if you wanted to be a trader in this environment, then the only way that you could be a trader in this environment were to keep smaller position size. Position sizes that did not accelerate or balloon or get larger and larger, because that's kind of the only way that you can remedy getting into a position too soon that goes against the trend, is to continue to DCA, right? And so I bet that you guys are acknowledging out there today that if you have done something wrong with any trades last week, it's that they weren't in line with the trend and the position size was too big and it caused you guys too much stress. Now, with all of that sounding pretty bearish, I'm going to take a minute and I'm going to share a video with you guys by a guy that none of us quite care for, the head of BlackRock, and he's going to give you his opinion, and I'm just going to give it to you in advance. I want you to listen to it carefully, and then I'm going to break it down. Largely, he's going to tell you why these markets are not going to go into a hard crash right now. A lot of analysts, all the big investment and hedge firms are actually pointing further out, potentially to 2025 for the big recession. And so now he doesn't know and I don't know, but I wanted initially to focus on managing risk, but now I want to focus a little bit on the big picture. The big picture from his point of view is that these markets are not going down. So check out this video with me.
We've had a government, I'm talking about the US now, that in 2000, we had an $8 trillion deficit. And today we have a $33 trillion deficit. So the deficit's grown by more than $1 trillion each year over the last 23 years. That is highly inflationary. The balance sheet of the Federal Reserve is highly inflationary. And so all these different measures are much more structural, much more difficult. So as a result of that, interest rates are going to remain higher. Opportunities for investors are going to be able to be very patient. You could do nothing and enjoy a positive return.
All right, so are you expecting a hard landing or a soft landing in the United States, or you just can't project?
We will not see a hard or a soft landing in 2024. The amount of fiscal stimulus that is just entering the economy, which is very inflationary. The CHIPS Act, the IRA, and the Infrastructure Act, about $970 billion. The largest peacetime, non-pandemic moment of fiscal stimulus. At the same time, our central bank is trying to arrest the economy. And so that's just hitting the J curve. And you see in labor settlements right now what's going on, and labor talk, 25% increases in wages. So I don't see a problem, but I do believe the Federal Reserve is going to have to raise rates higher, which probably will mean by 25 we may have a soft, we may have a hard landing. That is the only way I see how we're going to be arresting this, but I don't expect it anytime soon.
Okay, I'm going to keep my commentary on this extremely simple. He's basically saying that the government is spending $1 trillion a year. The Fed can't afford to continue to raise rates. He's going to have to cut, and because of the excess spending of that huge amount of money and the spending that we did in the past, it's simply going to continue to push the markets higher, because it's going to continue to push growth and revenues of companies higher. And we saw that in this last week's GDP report, which was much better than anybody had expected. It did not reflect an economy that was shrinking. It reflected an economy that was growing. And so let me just make two more points for you, and I'm going to keep this beautiful day, this sunny afternoon video super simple. I just wanted to drop you guys some thoughts going into this next week. And I want to make mention that whenever historically the markets have dropped more than 1% in September and more than 1% in October, the remainder of the year, the markets would go up around 7%. And so, not trying to time the bottom, but we are exiting October here very, very soon. And it looks to me, based on historical statistics, that we do have a decent chance that November and December could be relief months for the market moving forward. Nope, October did not turn out to be the bear market killer, but it brought us to the door of November here this next week. We've got some other big tech companies reporting, and we're starting to see that, as I said, with the GDP, with Microsoft, with Amazon, that the economy is not doing that bad. And so we're going to continue to watch earnings going into this week. And then I just want to leave you with one more thought. But before I do a quick station break, guys, check out the Discord. That's where you're going to get updated technicals and charts. I'm going to dive briefly into some thoughts on Google, and I'm going to dive briefly into some thoughts on Tesla here today. I'm going to update the Discord today with charts and further opinions and updates. That's where you find it. It's the Stock Squad, Stock Mo, Keenan Grace, Stock Up with Larry Jones, and myself in a Discord, sharing our knowledge and answering questions. Go check it out for yourself. I also want to talk to the new investors out there. If you guys need better trade tools, there's a link for the Moomoo app, which is a zero cost to trade platform. They're currently giving away up to 16 free stock. Guys, click on the link and get yourself some free stock with Moomoo. Okay, we're going to go over three more things lightning fast. It's going to be, first, I'm going to talk about the SPX. I think largely that we are going to have absolute best support on the SPX moving forward at 39.50 to 4,100. I'm going to go out on a limb and make a prediction. We'll see if it comes to pass. I do not believe that we will break and close beneath 39.50 here in the next month. So I think that's going to be the line where the bulls post up against the bears and say, you shall not go any further, and they shall begin to go back on a stampede and pushing the markets higher from there. And just to confirm that, Bloomberg came out with a report. They said that they see, based on the pullback and the extreme oversold conditions, they're predicting a 14% pump on the S&P 500. And so whether you go by Bloomberg or you go by statistical facts, we are looking at a potential of between 7 to a 14% pump on the markets in November and December. Nobody knows, but that's definitely something that we want to keep our eye on over the course of this week. As I said, this week is going to be a make it or break it. All of our favorite stocks, because they're down at the bottom of their ranges. And if they break down, then we need to really get scared. But if they hold, this could be a potential where we're going to see a reversal and we're going to see more room to the upside. So let's cover briefly Tesla. Now, I've been getting a ton of questions about one of my recent videos and the chart that I gave that Tesla could have support at 195 to the 185 range. And there are people who are saying, Josh, I'm holding off and I'm not going to buy any until it gets below 200. Now, here's the point I want to make to you guys. I recently said that Tesla's $200 price range was the new $100 price range from the beginning of this year. Now, when I did that video back at the beginning of this year and Tesla was down at $101, I said to everybody two things. I said, technically, this could go as low as $85. That's the next support if 100 breaks. The second thing is that there is a huge psychological support level for $100. That's where people psychologically see it as a nice round number that they're going to begin to take a chance at it. And that's exactly what proved to be correct. Now, I'm going to tell you the same thing applies now. If we see $200 break and we see a close beneath $200, then yes, it has this potential to find support next between 195 and 185. But $200 is a strong psychological support level for Tesla. We've come down 30% off of $300. And right now, this last week, it did look to me like we were getting some accumulation. And so I would not count on waiting until it broke beneath $200 to purchase. What I would consider doing for my own personal investments is what I've shared with you guys. I'm a buyer, and I made it very clear in two videos, I'm a buyer for my long-term portfolio happily at this current range. Underneath $210 in this entire range, I'm a buyer. And if it gets below, I will buy some more. But the truth is, I'm happy to be buying right now. Now, here's a technical I'm going to give you guys. Personally, I've looked at the charts. You're going to get more details on this in the Discord. But this week, we need to see $205 and around 90 cents hold. So we could say 206. We need to not get under 206 on the hourly chart and close. We need to see it stay above. If it dips beneath and then rises above quickly, that's okay. If that level holds throughout the course of Monday and Tuesday, then I'm going to say that the low is behind us and we're going up from here. So watch $206 carefully. That's the line in the sand or the point of control for Tesla this week. And then let's talk about Google. So I've done a lot of charting on Google. Right now it's extremely oversold. I made reference to the fact that on the oversold chart, it came down so hard this last couple weeks that it got to the exact same level and below it in oversold conditions as the COVID March 2020 market low. And so even though the chart doesn't look like it did back in March, the fact is the momentum down to the downside was just so extreme. Now, going into this next week, I'm going to let you guys know what I'm doing. I am largely in a position that I'm wanting to potentially take profits and close out if we get to $127.50 or $128. That's where I could see us coming up. And I'm expecting at that level that we would get rejected there and we would pull back and we would then find support at a lower level. But so the trade that I'm in, one, I'm nervous about because it went against the trend. Two, the size has gotten pretty big. Be careful, keep your position size down. That's one of the main points of this video is that if it goes wrong, it'll have gone wrong for those two reasons, trend and position size. But I am expecting a bounce. I am only expecting that bounce to go as high as 127, 128 on Google, and I will be one of the first to take profits so that I can reduce my position size. Well, we'll see how that turns out. Guys, I hope this beautiful day is beautiful for you, and I just want to appreciate all of you guys. Thank you guys for hitting the like, and hit the subscribe if you want to get the updates on these plays. Peace and blessings. Enjoy the rest of your weekend. Take care.